Today I'm in Castle Rock, California. I keep saying Castle Rock, California. I'm in Colorado. The Castle, California, just kind of rolls off the tongue. But I wanted to talk about actually understanding your Amazon FBA profit. We're visiting with some family in the month of May, ended actually 2 weeks ago now. But I wanted to go back through my profit and loss statements and share with you exactly how I look at my profit numbers so that I'm not only understanding how much I'm making every time I'm buying something, but also the cash flow that I have. Because especially if you're trying to leave your job with Amazon and you don't have a lot of capital up front, the cash flow is one of the most important things in the very beginning, because if you don't have money to buy inventory, you can't grow your Amazon business. So just pulling up my sales from the last month, we can see that I did not have a good month. I sold $3,910 worth of inventory, which is down 64% from the previous May. Most of that's because I didn't send in any shipments until literally the last week of May, and then I just sent another one in early June, and I'm starting to actually get back into doing retail arbitrage and online arbitrage as well. I know you guys are asking about that, but I think it's a good month to illustrate because I know a lot of you guys, $4,000 of sales is either what you're doing now or maybe what you aspire to be doing because you're doing it as a side hustle or maybe something that you think would help you to leave your job later. So I want to go over how I look at these numbers to see not only what InventoryLab says my profit is, or if you were to calculate all the Amazon fees, what your profit would be, but also how much cash you have available to you because of what you spent in the month as well as what you got back. Honestly, if I wasn't making these videos with you guys, I wouldn't look at my profit numbers this much because I do have a different system that helps me to worry about how much money I have in my business, which is based on Amazon payouts. But this is a very good thing that honestly I should be doing if I wasn't doing these videos. So I would recommend that you do this anyway. If you have a program like InventoryLab, which is what I use to send in all my shipments to Amazon, so it has all my costs in there and it has good profit and loss reporting for me, I'm gonna go ahead and screen record real fast. So we could head over into InventoryLab and look at the profit and loss. If you haven't gotten to this page before and you do use InventoryLab, what you have to do is go up here to reports, profit and loss, and then change this month to the month of May. And now we are looking at what InventoryLab says is our profit from this month. And they pull these numbers from Amazon. You'll see that the sales is actually a little bit higher than what I showed you, the $3,910, because they pull API based on what was actually shipped out to the customers. So I think this would include a little bit extra from the last week of April. Next, we can take a quick look at all these other things. We have refunds here for $175.29, which is only 4.4%, which is really not bad for returns. I did sell a lot more than just clothes, so that's why that happened. Got some reimbursements, credits, as well as some liquidations. That brings the total sales amount that we got, or income from Amazon, down to $3,845.06. Unfortunately though, this isn't the number that you're gonna see reflected in your payouts from Amazon because Amazon takes their fees off the top, and they have a lot of fees, especially if you're doing Amazon FBA like I do. So if we look at that, we have cost of goods sold here, which we are not gonna look at immediately. Instead, we're first gonna look at selling fees right here. So $631.65, so about 18 to 20% of sales, and that is just the Amazon referral fee. You pay that on every item that you sell, I'm pretty sure. We have FBA transaction fees, which are them picking and packing your items to send it to the customer, and that includes the fulfillment fees, which are $885, and the chargebacks, which are $62.11. You also have a chargeback refund of $6.94, and then the last major inventory fee is inventory and inbound shipping fees, and those are 30-day storage fees, which I had $12 of, removal order fees, which is when you get an item sent back to you, which is $2.02, disposal order fees, which is where Amazon will give something away or just destroy it, and that's 52 cents, and then inbound shipping fees, which is for the shipment that I actually sent in. Oh, I guess I sent one. Oh, I did send one at the beginning of the month. I forgot about that. We'll have to add that into things. When I was planning this video, did not remember that. I had inbound shipping fees of $17 at the beginning of the month and then $13 at the end of the month. This doesn't include any hazmat items that I sent in, so we'll actually have to add about another $15 in shipping that I had to pay out of pocket, because when you're sending hazmat items into Amazon FBA, and I will make a video on this, but you have to actually pay the shipping for that yourself. So $30.43, and then some other random fees down here, refund administration fee of $5.88. That's when you're selling jewelry or apparel and they have refunds come back. Those are the only time that you'll get those fees. Liquidation costs were $20, so I only made like $7 on liquidation, so that's okay. And then $40 for the Amazon Pro subscription, which you're gonna wanna get if you sell more than 40 units in a month. We're not actually gonna look at this $3,051.33 number. I'm gonna collapse all these so that we're just looking at totals. And so the total amount of Amazon fees that we got looks like was $1,654.04, which divided by that top line number over here is 43% of everything that we sold on Amazon, which is a lot. Honestly, this 43% is a little bit higher than what I normally think it will be. Normally, I think it's around 35 to 40%, but that's just because I had a lot of old inventory that was selling, and when those sell at lower prices, the fees become percentage-wise higher than if I was selling them at the normal price that I thought I was gonna get when I shipped them into Amazon. And if we come down here, we can see that the cost of goods sold, it says, was $1,397.29. Cost of goods sold is the amount of money that you spent on inventory that was sold during that month. This $4,000 of sales amounted for, let's just say it was 350 units. When I purchased those 350 units that sold this month, I spent $1,397.29. This doesn't include inventory that's still at Amazon, inventory that I just shipped into Amazon, only the things that were sold that month. This is how most inventory-based businesses do accounting, but it doesn't really give you a good representation of your cash flow. So we'll talk about that in a second, but first, if we look at the net profit down here, it's $793.73, which is not very good, seeing as though this is partially how I make a full-time living, but for not sending anything into Amazon for a very long time and then actually finally getting some inventory to get to Amazon, and it's starting to sell a little bit. And June already has picked up. You can see I'm already selling almost as much as I did in all of May. It's only been half the time, so we're getting the ball moving again. One more thing that we can look at over here is this very bottom portion before we actually dive into the things that you should know about how your profit and cash is allocated, but it's the sales tax part of it. You shouldn't have to worry about this because I'm pretty sure all states now actually have marketplace facilitator tax, meaning that when someone buys an item, let's just say I was living in Florida, sales tax where I was in Orlando was 6.5%. So whenever I'd buy something and it wasn't for the purpose of resale, I would have to pay an additional 6.5% on that. That was the case whether I bought it in a store or whether I bought it on Amazon and got it shipped to me. Well, if someone buys that from you, technically you're collecting that sales tax. The good thing is about 4 or 5 years ago, you would have had to have registered everywhere that you have sales tax nexus, sent in your sales tax to whichever municipality or state that was, and just have a lot of hassle. Because of the prevalence of all these online giants, or marketplaces is what they're called, there's a marketplace facilitator tax that we see right here, which amounts to the exact amount of the sales tax that was collected. Up until last year, this wasn't the case because there were still states like, I think it was Arkansas, that didn't have this law on the books yet, but now they do. So Amazon can collect all taxes, which is why all these numbers, the positives and negative, equal out, which makes life very easy. Don't really have to worry about sales tax at all at that point. We're gonna move over to a sheet real quick instead of just this InventoryLab page because this doesn't really give you a full picture of your cash flow, which to me is more important than my overall profit and loss as I'm thinking about growing my business because I'm not worried about taking as much money out. I'm worried about buying more and more inventory. And this can be solved through getting the right credit cards, which I also have a video of that I'll link about how I use credit cards to quit my job, as well as using the right credit cards for your reselling business. But we're gonna take this cost of goods sold number, $1397.29, come way back over here in the sheets. We also had cost of goods purchased. But an easy way to not worry about this is if we go back over here to the net profit number, we have $793.73. And if we add back in that cost of goods sold number, we'll get $2,191.02 is our gross cash flow. So the money that came back into our pocket before we're paying off inventory that we've already purchased. Because this is what comes back to us in terms of payout, the $2,191.02. From that, there's a lot that we need to do. We need to pay off the inventory, obviously, this $1,400, but a lot of that already has been paid off because I used some of the previous profits that I made in Amazon to pay it off. So I was actually inventory debt-free in May. Therefore, I didn't really need to pay this off because it was already paid off for me. However, I did need to buy new inventory, and that's what happened when I made shipments. So if we go over into closed batches in InventoryLab, I actually need to go back over here and find the second one that I did because I forgot that I sent the shipment in the beginning of May, which doesn't quite count. Yeah, right here, it said, the reason I missed it is because it says it was February 10th because that's when I created the batch, but I actually shipped it in the first week of May. It took forever for me to actually get my act together and send that into Amazon. But all this, we technically shouldn't put in cost of goods purchased because we bought it back in February. But if we look at this total buy cost, it was $1,139.10. We'll just say first shipment, cost of goods purchased, COG. I don't think that's actually a thing, but I made it a thing. And the second shipment, COG, which amounted to $1,059.42. That means that from that payout, if we were to include that first shipment, because normally what happens is you buy inventory and then ship it in the same week if you're smart. If we take this number and subtract out these two, we see that we're already negative $7.50 in terms of our cash flow because we spent more money than we brought in that month. Ultimately, this isn't the end of the world because I do use credit cards, and this way, I have inventory that's at Amazon right now, actually about $2,100, that's just sitting at Amazon waiting to be sold, normally in the FC transfer process. But this already brings us to a negative cash flow number, which is important to realize. If we did subtract out this first cost of goods purchased from that first shipment, we're still down to $1,131.60, which is more realistically what our cash profit would be, or our positive cash flow, because we'd already paid off that stuff from February. But this isn't honestly the whole picture. And I did have someone point that out to me pretty recently because I had made a video talking about cash versus accrual accounting. And since I hadn't been buying anything, how much profit I was actually making in terms of cash profit, but I forgot to put in all the subscriptions because those are just an auto pay, and I keep forgetting that I'm using them and buying them even though I'm not really using them. So if we add all those back in, which are these guys, my subscriptions, have Scout IQ, which I don't use anymore, so we'll delete that. Half of my QuickBooks subscription because I split that with other divisions in my business, so I pay for half of that based on my reselling business. My business insurance, which is $41.25. Keepa, which is $24. SellerAmp, which is $16.95. And then I could also add back in something that's a capitalized expense, which would be Be Cool and InventoryLab. The reason that these are capitalized is because I pay them on a yearly basis. Therefore, they're technically not cash that leaves my account this month. And so if we're just looking at cash flow in terms of what is there right now, we would take the total of all these, which is $93.45, and subtract out $93.45 from the $1,100 number to get just over $1,000 of positive cash flow. This is obviously a lot bigger than this $793 number, which is how much our profit was, because the cost of goods sold was higher than the cost of goods purchased. We sold more in terms of the buy cost of inventory that was sold during the month than what we actually bought during the month, which is bad. Ideally, you want to actually be buying more than you're selling, because then your business is growing and you're eventually making more and more money. But because that was the case, there's actually about $200 more in cash flow that we have that's not reflected in InventoryLab. And if you just look at this number on InventoryLab, you won't realize, or maybe you won't recognize, that you have more cash flow than you thought. However, this number is important because that essentially shows you how much your return on investment was from all these items, but not fully, because you would actually still have to subtract out all of these subscriptions, as well as, let's just say, the capitalized subscriptions, which turned to be $90 on BeCool because it's an annual plan, and $40 on InventoryLab. So we'll add another $130. All right, so let's turn on the blender. I hope you can still hear me with the lav mic, but we have this $793. Subtracting out all of those expenses that happened during the month brings us to $570.28. Now remember, I also had to pay for some more shipping. So if we subtract out those other $15, plus I probably had to buy some boxes, which are another $15, plus all the mileage that I drove, we could see that that number actually continues to go down, but it does have a finite stopping. Obviously, you only spent so much money. But even if we just take this $540.28, that'll give us a more realistic interpretation of what our return on investment on that inventory is. So we took $540.28 and divide that by our cost of goods sold during the month. We averaged about 38.67% return on investment when it's all said and done, which is actually pretty decent, to be completely honest with you. Obviously, that number would be a little bit higher if I was sending more inventory in. That was at a higher return on investment, but 40% is pretty typical with what I have. However, that return on investment doesn't even include things like taxes and paying myself. This is just how much extra money came into my bank account than what I spent. So on top of that, from that $540, I had to pay taxes on that profit, unless I'm planning on spending that in future months. And I still had to pay myself, which obviously I pay myself very little this month. But that does show you that this profit number, which is our legitimately accrued profit based on how much we spent on inventory that was sold versus the cash flow that we have in the account, are pretty different numbers. And that can be the case as you sell in an inventory-based business. And it can be a little bit difficult to understand, but if you kind of get a grasp on these things, it'll help you to really get better at understanding how you should move your money to grow your business, which is one of the reasons why, if we move over to a different spreadsheet that I've already made a full video about, I just wanted to share this with you real quick at the end of this video, because it shows you how I use this in practice. Essentially, I need to understand how much money I get paid out by Amazon, which was this $2,191.02 number. That's the money that I have to allocate back towards paying off inventory, buying new inventory, paying myself, paying for all these subscriptions, as well as planning for the future of my business. And so this spreadsheet, I have a full video on it. I'll link it as I finish out this video, but we can see here, I not only am planning to pay for everything that I have to pay for across all the divisions in my business, but I also have these allocations, which is 15% of my payouts going to me to pay myself, 5% of that going towards taxes, which is 30% of how much I'm paying myself, an extra 0.1% into our profit account, which is like a bonus account. We do use that to do fun things, 4.9% going to operating expenses up to $250, which pays for all of those subscriptions, as well as savings for those capitalized subscriptions that I will have to pay the annual basis on, 1% for retained earnings, which is also a way to future-proof our business, and that's an account that all the divisions in our business pay into, so we can make big upgrades like buying this GoPro that I use, make my life selling in stores a lot easier. And then 74% of it, which is way more than it used to be, goes towards my inventory, because I'm trying to grow my business now, and I know that about 60 to 65% is all that I actually need to put towards inventory to make sure I'm paying off my cost of goods sold, which we can actually see reflected over here. If we divide that $1,300 number divided by the $2,196, we see 63.77%, which is higher than it normally is. So by putting an extra 10% and bringing that up to 74%, I'm gonna produce an inventory surplus for myself, which will make it so I'm not buying inventory out of debt, but out of cash. And that way I'll be able to sell more, and eventually this 15% owner pay instead of 25% will actually account for more money in my pocket than that 25% would have, because I'm able to buy more inventory in a more financially sustainable way. If you're interested in learning more about this, I have a video about this spreadsheet here, how and why it works right down here if you want to watch those next. See you there.